Every year, health insurance companies deny 1 out of every 5 legitimate medical claims in America. It's called delay, die, defend, and it's not just a strategy. It's a system designed to profit from your suffering. UnitedHealthcare alone denies nearly 1/3 of all claims, double the industry average. They're using AI algorithms specifically programmed to reject your claims, even when you deserve coverage. The UnitedHealthcare CEO was recently assassinated, but what they don't want you to know is why. This isn't about one company or one CEO. This is corporate greed in healthcare killing thousands of Americans every year. In this investigation, I'm exposing the insurance industry secrets they've hidden for decades. Real people denied cancer treatments. Families bankrupted. Lives destroyed by predatory insurance practices. The American healthcare system isn't broken, it's working exactly as designed, to profit, not to heal. Watch until the end, because what I'm about to reveal will change EC health insurance forever. This is the healthcare industrial complex exposed. Let's begin.
What if I told you that the largest protection racket in America isn't run by mobsters in back alleys, but by Fortune 500 companies with glass towers and primetime commercials? Picture this. A man in an expensive suit shows up at your door with a smile and a promise. "Pay me $500 a month," he says, "and I'll protect your home from fires, floods, and disaster." It sounds reasonable, doesn't it? So you agree. You pay every single month, year after year, building what you believe is a safety net beneath your family's future. Then one day, the unthinkable happens. Your house catches fire. Everything you've worked for is going up in smoke. You call the man in the suit, expecting him to honor his word, to deliver on that promise of protection you've been paying for all this time. But instead of help, you get a stack of paperwork and a cold rejection. "Oh, I'm sorry," he says, flipping through a contract you barely remember signing. "You failed to mention you had a flammable rug in the living room. That's on page 47, clause 12, subsection B. We don't cover that. You've just been denied." And the man in the suit? He walks away with every dollar you've given him while you're left standing in the ashes. Now here's the real question. Isn't that just organized crime with better PR? Because that's exactly what the insurance industry has perfected over the past century. It's a business model built on collecting premiums from millions while systematically denying claims when disasters actually strike. This isn't conspiracy theory or exaggeration. This is documented reality, played out in courtrooms, congressional hearings, and the shattered lives of everyday people who thought they were buying peace of mind. The insurance racket operates on a simple principle that any mob boss would admire: sell protection, collect payment religiously, and when it's time to pay out, find any excuse not to. The mafia used to call it a protection racket. Wall Street calls it risk management and quarterly earnings optimization. You already know this feeling, don't you? That nagging suspicion when you're signing an insurance policy that somewhere, buried in all that legal language, there's a trap waiting to spring. Maybe you've even experienced it firsthand, fighting with your insurance company over a claim they should have covered, watching them deploy an army of adjusters and lawyers to find reasons why your suffering doesn't quite meet their criteria for compensation. The numbers tell a story that should outrage anyone paying attention. Insurance companies in America collect over $1 trillion in premiums every single year. Yet when Hurricane Katrina devastated the Gulf Coast, when wildfires consumed entire California communities, when medical emergencies bankrupted families who thought they had coverage, these same companies found creative ways to deny billions in legitimate claims. They didn't just refuse to pay, they engineered the refusal, weaponizing fine print and bureaucratic exhaustion until claimants simply gave up. And here's what makes this particularly insidious. Unlike the mob, insurance companies don't have to hide. They operate in broad daylight, protected by regulations they helped write, celebrated by investors for their profitability, and defended by politicians who benefit from their campaign contributions. This is white-collar crime dressed up as responsible business practice. and it's extracting wealth from working people on a scale that would make any crime family jealous. By the end of this video, you'll know exactly which clauses they use to deny claims, how to spot the red flags before you sign, and the specific questions you need to ask that force them to show their hand. You'll understand the 3 legal loopholes they exploit most often, and more importantly, how to close those loopholes before disaster strikes. This isn't just about being angry at the system. This is about arming yourself with the exact knowledge they don't want you to have. But here's what almost nobody realizes, and this is where it gets really dark. There's a specific technique these companies use that's so effective, so quietly devastating, that even people who think they're fully covered get blindsided. It's hiding in plain sight in your policy right now, and once you see it, you'll understand why fighting an insurance denial feels impossible. Stay with me here because we're going deep into the mechanics of this system, and what emerges isn't pretty. But this knowledge is the only real insurance policy that never expires, and understanding exactly how you're being played is the first step toward protecting yourself and your family from becoming their next victim. Before we expose exactly how they get away with this, I need to know something. Has this happened to you? Drop a comment right now and tell me. Were you denied after years of paying premiums? Did you fight back, or did you give up when they buried you in paperwork? Maybe you work in the industry and you've seen the denial playbook from the inside. These stories matter. Your story matters, because that's exactly what they're counting on. Your silence. See, insurance companies spend billions on advertising to control the narrative. They show you the caring agent, the helpful claims adjuster, the family protected. We have something they can't buy, the truth from people who lived it. Every comment you leave, every time you share this video, you're breaking their monopoly on the story. You're making it harder for them to hide. The algorithm amplifies engagement, which means your voice here doesn't just matter to me. It matters to the single mom scrolling right now who's about to sign a policy she doesn't understand, or the family fighting a denial and wondering if they're alone. If you haven't subscribed yet, do it now. Not for me, for them. Because every time we expose how these systems actually work, someone gains the power to protect themselves. Hit that notification bell, because what's coming next goes deeper than insurance. This is the blueprint. The same pattern runs through Wall Street, through healthcare, through every industry where corporations have learned to profit from your trust and your fear. Comment below with your experience. Like this video if you want more people to see it. Share it with someone who needs to understand this. That's not just engagement. That's resistance. They have lawyers and lobbyists. We have each other and the truth. Now let's get back to business, because I'm about to show you the specific tactics they use to deny claims, the legal loopholes they exploit, and the exact moment in your policy where you're most vulnerable. The transformation from neighborhood protection racket to billion-dollar corporate enterprise didn't happen overnight, but the core mechanics? Identical. Let me walk you through exactly how this works, because once you see it, you can't unsee it. It starts with the pitch, and honestly, it's brilliant. Insurance companies aren't selling you a product. They're selling you relief from fear. Think about every commercial you've ever seen, every billboard, every sales conversation. They all start the same way. The world is dangerous, unpredictable. One disaster away from destroying everything you've built. Your house could burn down. Your car could get totaled. You could get seriously ill. These things do happen. That's not the lie. The lie is what comes next. They position themselves as the only rational solution. Protect yourself, they whisper. And suddenly that monthly payment feels less like an expense and more like survival. You're not buying protection. You're buying the temporary psychological relief of feeling protected, which is a completely different thing. Now here's where it gets mathematically beautiful. If you're a sociopath, insurance operates on one simple principle. Collect premiums from millions, knowing only a small percentage will ever file claims. This is called actuarial science, and it's entirely legal. They employ armies of statisticians to calculate precisely how much to charge and how little they'll pay out. Every month, like clockwork, those premiums flow in. Automatic withdrawals, paycheck deductions, annual renewals. A river of money, constant and reliable. Most people will pay for decades without filing a significant claim. That's not luck. That's the model. Your premiums aren't sitting in some personal account with your name on it. They're funding executive salaries, shareholder dividends, and those expensive commercials designed to bring in more customers just like you. But here's where it turns from business into a racket. Pay attention, because this is where everything flips against you. The moment you file a claim, the entire relationship changes. You're not a valued customer anymore. You're a liability, a threat to quarterly earnings, a problem to be managed or eliminated. Insurance companies employ specialized teams whose entire job is to find reasons to deny or minimize your claim. And here's the part that should make your blood boil. These people are incentivized to deny you. Their bonuses, their promotions, their entire career trajectory depends on protecting company profits by not paying you. Let that sink in. The person reviewing your claim gets rewarded for saying no. The tactics they use are sophisticated and brutal. They'll delay, requesting documentation you already provided. They'll lowball offers, hoping you'll take pennies just to end the stress. They'll send investigators to find any discrepancy, any tiny detail that could justify denial. They'll point to clauses buried in contracts written in deliberately complex language, exclusions that directly contradict the simple promises in their ads. And if you fight back, they have something you don't: unlimited resources. They can drag this out for months or years, knowing most people can't afford prolonged legal battles. The psychological warfare is intentional. They're counting on you giving up. Now comes the most perverse part. The financial incentive structure makes this inevitable. Insurance executives don't get rewarded for keeping customers happy. They get rewarded for something called the loss ratio, how much they pay out versus how much they collect. A lower loss ratio means higher profits, higher executive compensation, better stock performance. In other words, the less they pay you when disaster strikes, the more successful they're considered. This isn't a bug in the system. This is the system. You're paying protection money to someone who has every financial reason not to protect you when it matters. And here's the kicker that makes this truly comparable to organized crime. They operate with the full blessing of the legal system. They've spent decades and billions lobbying politicians, writing favorable regulations, ensuring the rules favor them at every turn. When you sign that policy, you're not entering a fair agreement between equals. You're accepting terms dictated entirely by the other side, enforced by legal structures they helped create. It's a rigged game dressed up as consumer protection. And the house always wins. Think about something for a second. If any other person or business in your life treated you this way, took your money for years, then fought tooth and nail not to help when you needed it, you'd recognize it immediately as exploitation. But because insurance has been normalized, because we're told it's responsible and necessary, because everyone else is doing it, we accept this treatment as somehow legitimate. That's the final piece of the racket, making you believe you need them more than they need you, when the reality is your premiums fund their empires while your claims are treated as inconvenient disruptions to their profit margins. If this is clicking for you, if you're seeing the pattern clearly now, drop a comment and just write, "I see it now." Now I want to take you into the real human impact of this system. Because behind every denied claim is a story, a family, a life-altering moment where someone discovered that the safety net they'd been paying for was made of paper. These aren't abstract statistics. These are people who did everything right, who trusted the system, and still got crushed by the machinery of corporate profit. Let me show you exactly how this plays out. Exhibit A. When disaster strikes. Let's start with one of the most devastating examples in recent American history. Hurricane Katrina, 2005. The storm tore through the Gulf Coast. Entire communities wiped out. Hundreds of thousands of homes destroyed. Lives shattered. And when survivors turned to their insurance companies, policies they'd faithfully paid for years, they were met with one of the most cynical mass denials in insurance history. Here's the trick they pulled. They argued the damage wasn't caused by the hurricane itself, which was covered, but by the flooding that followed, which conveniently wasn't covered. Think about the absurdity of that for a moment. A hurricane literally pushes water inland. The two are inseparable. But insurance adjusters showed up with tape measures and legal arguments, parsing whether your ruined home was destroyed by wind or water, as if that distinction mattered to families who'd lost everything. Thousands of claims denied outright, others paid at fractions of actual damages. Meanwhile, these same companies reported record profits in subsequent years. They collected premiums from an entire region for decades, and when the worst-case scenario happened, they found loopholes. Families ended up in FEMA trailers for years. Some never recovered financially. But the insurance executives? They got bonuses for protecting the bottom line. Exhibit B, the health insurance trap. This pattern repeats everywhere, but nowhere is it more cruel than in health insurance. Before the Affordable Care Act imposed minimal regulations, insurance companies had a weapon called rescission. And here's how they used it. You'd pay premiums for years believing you had coverage. Then you'd get sick. Cancer, heart disease, something expensive. You file a claim, and suddenly the company launches an investigation into your medical history, searching desperately for anything. Any minor health issue from years earlier that you might have forgotten to mention on your application. Maybe you had acne as a teenager, took prescription medication. Maybe you saw a doctor once for back pain. These utterly irrelevant details would be used to retroactively cancel your entire policy, leaving you not just without coverage for your current illness, but liable for enormous medical bills. Imagine the psychological devastation. You're already dealing with a serious health crisis. And now you discover the insurance you counted on doesn't just refuse to pay. They're claiming you never had legitimate coverage at all. They took your money every month, but the moment you needed them, they made it as if the contract never existed. This happened to thousands of Americans. People who followed all the rules, who disclosed everything they remembered. The insurance companies employed specialized teams to hunt through medical records looking for grounds to rescind policies, because every policy they canceled meant avoiding hundreds of thousands in treatment costs. Exhibit C, the everyday version. And this isn't just catastrophes. The everyday version plays out constantly in less dramatic but equally infuriating ways. Picture a working family. They've been paying car insurance for a decade without incident. Then they get into an accident, not their fault, and file a claim. The adjuster comes out, takes notes, and a few weeks later sends a denial letter. The reason? Buried on page 47 of the policy document, there's a clause requiring all drivers to have completed a defensive driving course within the previous 2 years. Nobody mentioned this when you bought the policy. It wasn't in the advertising. The salesperson certainly didn't highlight it. But there it is, in tiny print among hundreds of other clauses. And now it's the reason you're on the hook for thousands, while the company that collected your premiums walks away. This is the everyday reality. The promises are simple. The denials are complex. And the whole system is designed to make you feel like somehow it's your fault for not reading every word of an intentionally incomprehensible legal document. The timing is no accident. What makes this especially insidious? The timing. Insurance companies know they're denying you at your most vulnerable moment. Your house just burned down. You're recovering from surgery. You're dealing with an accident's aftermath. You're stressed, frightened, financially stretched, emotionally exhausted. That's when they hit you with the denial. When they know you have the least capacity to fight back. When you're most likely to accept whatever they offer because you desperately need something. It's predatory in the truest sense, targeting people at their weakest point and exploiting that vulnerability for profit. They're literally banking on the fact that someone who just lost their home or is facing medical bankruptcy doesn't have the energy to fight. Here's what you need to understand. This isn't a series of unfortunate mistakes. This isn't a few bad actors. This is the business model functioning exactly as intended. Every one of these denials was reviewed and approved by company policies. Every rescinded health policy. Every Katrina claim rejection. Every absurd contractual loophole being invoked. These were conscious corporate decisions made in boardrooms by people who knew exactly what they were doing. They built a system that maximizes premium collection while minimizing claim payments. They weaponized complexity, legal technicalities, and the massive power imbalance between corporations and individual policyholders. The human cost is not a bug, it's a feature. Because every dollar they don't pay to you is a dollar that flows to shareholders and executives. If you've experienced something like this yourself, a claim denial that felt like betrayal, a loophole that appeared out of nowhere, a fight you couldn't win, drop a comment. Just right. This happened to me. Now I want to pull back the curtain on something most people never fully grasp until it's too late. The insurance contract itself is a weapon, carefully engineered to protect the company from you, not to protect you from disaster. This is where the true sophistication of the racket becomes visible. Because what looks like a standard business agreement is actually a masterclass in legal manipulation. The incomprehensibility is intentional. When you sign up for insurance, you're handed a contract that typically runs 50 pages or more, written in dense legal language that would challenge even attorneys who don't specialize in insurance law. This isn't accidental, let me show you what I mean. Here's a real example of how these things read. Page 12, Section 4. 3B. Coverage shall not extend to loss or damage caused by water, whether driven by wind or not, unless the primary cause of the water intrusion is attributable to wind-driven rain entering through a wind-created opening in the roof or walls, provided such opening was not pre-existing or the result of structural inadequacy. Read that again. You're covered for water damage, unless the water came from the wrong direction, or entered through the wrong type of opening, or if that opening existed for reasons they decide weren't the right reasons. This is one sentence about water. Now imagine 50 pages of this. These documents are deliberately constructed to be incomprehensible. They're filled with terms of art, cross-references, nested clauses, and exceptions to exceptions. Page 23 references Section 8.1, which modifies the exclusion from page 15, which itself has exceptions listed on page 31. The average person would need days to carefully read one of these contracts, and even then, without legal training, they'd miss the significance of crucial provisions. But nobody does that, right? You're sitting in an agent's office or clicking through a website. There's a checkbox waiting. You scroll, you skim, you sign. The insurance companies count on this. They've designed a system where the theoretical ability to read the contract provides legal cover, while the practical impossibility of understanding it gives them unlimited room to deny claims later. Marketing says one thing, the contract says another. The real deception lives in the gap between what the marketing promises and what the contract actually delivers. Think about those commercials. Families protected, homes rebuilt, lives restored after tragedy. The message is simple, we've got you covered. But here's what's actually in the contract. Your homeowner's policy says it covers fire damage. Sounds simple, right? Then you get to page 34, section 12.1, subsection C. Exclusions apply if fire originated from unapproved heating source during vacancy period exceeding 30 consecutive days, or resulting from criminal activity by any resident. Wait, so if you're on vacation for 5 weeks and an electrical fire starts, not covered. Your teenager does something stupid that causes a fire, not covered. You used a space heater that wasn't on their pre-approved list, not covered. The policy covers theft. Great, except page 41, clause 9.2. Theft coverage requires evidence of forced entry, functioning locks meeting specification standards outlined in Appendix D, and police report filed within 24 hours of discovery. So if the thief picked your lock without breaking it, not covered. If you can't prove your locks met specification standards from Appendix D that you've never heard of, not covered. If you discovered the theft on Sunday night and filed the police report Monday morning, too late. Not covered. These aren't minor technical details. These are carefully crafted escape hatches that allow the company to deny huge categories of claims while technically staying within the law. And they're scattered throughout the document, not helpfully collected in one place where you could see how limited your coverage really is. The bureaucratic labyrinth. But the contract is only the first layer. When you actually file a claim, you enter a bureaucratic maze that's been intentionally designed to exhaust you. First, the paperwork. You'll need Form 27B, completed in blue ink. 3 copies of receipts for items over $100. 2 witness statements, notarized. Photos from 4 angles, time-stamped. Police report with case number. Medical records with diagnosis codes. Oh, you used black ink on Form 27B? Claim processing stopped. Resubmit. Then, the waiting. Weeks turn into months. You call for updates. It's with the adjuster. Call again. It's been escalated to a supervisor. Call again. We need additional documentation. What documentation? Someone will contact you. Nobody contacts you. Meanwhile, you're dealing with the actual disaster, trying to repair damage, pay bills, keep your life together. The stress compounds, the financial pressure builds, and that's exactly what they're counting on. The longer they delay, the more desperate you become, and the more likely you'll accept whatever lowball offer they eventually make just to end the ordeal. This isn't inefficiency. This is strategy. When they finally deny you, when the denial comes, it looks like this. Based on review of Policy Document Section 8, 1D IV, cross-referenced with Exclusionary Clause 14.2, and applicable limitations outlined in Addendum C, paragraphs 3-7, we regret to inform you that your claim does not meet coverage requirements as stipulated in your policy agreement. You have to dig back through that incomprehensible document to even understand why you're being rejected. And if you want to challenge it, you're entering a battle where the resource asymmetry is staggering. You're one person, probably already financially stressed. They're a corporation with dedicated legal departments, unlimited expert witnesses, and the capacity to drag things out indefinitely. They can afford to spend $100,000 in legal fees to avoid paying a $50,000 claim because the precedent matters. If they fight every claim aggressively, most people give up. The money they save across thousands of similar cases dwarfs the cost of a few protracted legal battles. The cultural defeat. This power imbalance creates a chilling effect beyond any individual case. People who've been through this tell their friends and family. The word spreads. A kind of learned helplessness sets in. People begin to assume insurance companies won't pay, that fighting is futile, that you should just be grateful for whatever you can get. This collective demoralization is itself a victory for the industry because it means fewer challenges, fewer complaints, fewer people willing to push back. The system trains us to accept less than we were promised, to absorb the betrayal as normal, to blame ourselves for not reading the fine print rather than blaming the companies for writing contracts specifically designed to be unreadable. The inversion. What makes this particularly insidious is how it inverts the entire premise of insurance. The concept is supposed to be about pooling risk, a community of policyholders sharing the burden of occasional disasters, so no single person is destroyed by bad luck. But what's been built instead is a system of systematic extraction. The many pay in, the few at the top profit enormously, and those who actually need help are treated as adversaries to be defeated. The contract doesn't facilitate mutual protection. The contract is the tool that transforms a cooperative arrangement into an exploitative relationship. Every clause, every exclusion, every bit of impenetrable jargon serves one purpose: giving the company maximum flexibility to take your money while minimizing their obligation to help you. The evolution of the weapon. And here's what really drives this home. Insurance companies employ armies of lawyers who spend their entire careers crafting and refining these contracts. They learn from every case where they had to pay out. They close loopholes that benefited customers. They find new ways to limit liability. The contracts evolve, becoming more sophisticated, more airtight, more weighted in favor of the company. You're not reading a neutral legal document. You're reading the accumulated knowledge of decades spent figuring out how to take money from people while avoiding the obligation to protect them. The imbalance isn't just about resources in any individual dispute. The imbalance is baked into the document itself, written entirely by one side to serve one side's interests. And you're expected to just accept it as the terms of doing business. If this is making you see insurance contracts differently, if you're realizing that the contract itself is the scam, drop that in the comments. Just write, the contract is the scam. Now I want to show you why this system isn't just a collection of bad corporate practices, but is actually built into the fundamental structure of how modern finance works. Because when you follow the money and the incentives, you realize that denying your claim isn't an unfortunate side effect of the business model. It's the entire point. Wall Street has transformed insurance from a service into a wealth extraction machine, and the people running these companies are rewarded handsomely for perfecting the art of not paying you. Let's talk about how executive compensation works in the insurance industry. because this is where the perverse incentives become crystal clear. CEOs and senior executives at insurance companies receive bonuses and stock options based largely on something called the loss ratio, which is the percentage of premium revenue that gets paid out in claims. The lower that ratio, the more profitable the company, and the bigger the executive payday. Think about what that means in practice. The person at the top of the organization, the one setting strategy and culture, gets personally enriched by denying claims. Every dollar not paid to a policyholder in their time of need is a dollar that improves the metrics that determine executive wealth. This isn't about a few bad apples making unethical decisions. This is the compensation structure itself, creating a direct financial incentive to find reasons not to honor the promises the company made. When quarterly earnings calls happen and executives brag to investors about their improved loss ratios, they're literally celebrating the fact that they paid out less to the people who needed help. Wall Street analysts cheer these numbers. Stock prices rise, and the message cascades down through the entire organization. Denying claims is good for business, good for your career, good for everyone except the customers who are supposed to be protected. This gets even more troubling when you understand the legal obligation these companies operate under. When an insurance company is publicly traded, it has what's called a fiduciary duty to its shareholders. That means, legally, management's primary obligation is to maximize profit for investors, not to provide excellent service to policyholders. When those two interests conflict, and they constantly do, the law actually requires them to prioritize shareholder returns. You were never the protected. You were always the product. So when you file a claim, you're not just dealing with a company that has bad incentives. You're dealing with a company that is legally obligated to put investor profits ahead of your needs. The transformation is complete. What was supposed to be a mutual protection arrangement has become a vehicle for extracting wealth from policyholders and transferring it to Wall Street investors. Your premiums flow in, and instead of being held in trust to help you in crisis, they're used to generate returns for people who have no relationship to you and no interest in your well-being beyond how much profit can be extracted from your misfortune. But the structural corruption goes even deeper than corporate incentives, because the insurance industry has spent decades and hundreds of millions of dollars ensuring that the regulatory environment enables, rather than constrains, this behavior. Insurance companies are among the largest political contributors in America, funding campaigns for legislators at state and federal levels. And that money isn't charity, it's investment. They're buying access and influence, making sure that when regulations are written, they're written with enough loopholes and exceptions that the industry can continue operating exactly as it prefers. When consumer protection laws are proposed, insurance industry lobbyists swarm Capitol Hill and state capitals, arguing that increased regulation would raise costs for consumers, or stifle innovation, or harm the economy. It's the standard playbook of regulatory capture, where the industry being regulated effectively controls the regulators. And it works. Despite countless scandals, despite documented patterns of claim denial, despite public outrage after every major disaster reveals the systematic betrayal of policyholders, the fundamental structure never changes. Politicians who depend on insurance industry money aren't going to pass laws that seriously threaten insurance industry profits. The system protects itself. What makes this particularly sinister is how the major insurance companies move in lockstep when it comes to these practices. You might think that competition would solve this problem, that if one company treated customers badly, others would gain market share by offering better service. But that's not what happens. Instead, you see what economists would recognize as cartel-like behavior. When one major insurer finds a new way to deny claims or introduces new exclusions, the others quickly follow. Industry associations share best practices, which in this context means sharing the most effective techniques for avoiding payouts. They all use similar contract language. They all employ similar delay tactics. They all cite similar rationales for denials. This isn't coincidence, it's coordination. Informal perhaps, but coordination nonetheless. Because if all the major players are equally difficult to deal with, then customers have no real alternative. You can switch insurance companies, but you're just trading one set of claim denial tactics for another. The industry has collectively decided that maximizing profit through claim minimization is more valuable than competing on service quality. And because they all make that same calculation, there's no market pressure to change. This is where the comparison to organized crime becomes more than just rhetorical flourish. What we're looking at is a system where powerful entities collude to extract money from ordinary people under the promise of protection, deliver that protection selectively or not at all, and use their wealth to ensure the legal and political system enables their behavior. The difference between a mob protection racket and the insurance industry is that the mob operates outside the law, while insurance companies have successfully made their racket legal. They've bought legitimacy. They've captured the regulatory apparatus. They've woven themselves so deeply into the fabric of modern finance that challenging them seems like challenging capitalism itself. And that's exactly how they want it perceived, because it makes people feel powerless to demand anything different. The truth hidden in plain sight is that insurance companies function as financial intermediaries whose real customers are Wall Street investors, not the people paying premiums. The policyholders are actually the product being monetized. Your premiums are raw material being processed into investor returns, and every claim paid out is seen as a loss, a failure of the system to efficiently convert your money into their profit. The glossy commercials, the friendly agents, the reassuring slogans, all of that is marketing designed to keep the premiums flowing while obscuring the fundamental extractive nature of the relationship. And it works because we've been conditioned to see insurance as a necessary part of responsible adult life, something you simply must have, which eliminates our bargaining power and allows the industry to set terms entirely in its favor. This isn't a failure. It's by design. The incentive structures, the legal frameworks, the political protection, the industry coordination, all of it creates a system where the rational business decision is to deny claims whenever possible, and where there are minimal consequences for doing so. This isn't a few companies behaving badly. This is the entire sector operating according to principles that Wall Street celebrates and rewards, principles that are fundamentally at odds with the ostensible purpose of insurance itself. Drop a comment if you're starting to see how deep this goes. Just right, it's all connected. So after everything we've covered, after seeing how this system is designed to work against you at every level, you might be wondering if there's any way to protect yourself, any strategy that gives you a fighting chance when you're up against this machinery. And the honest answer is that there's no perfect solution, no magic formula that completely neutralizes the power imbalance. But there are absolutely steps you can take that shift the odds more in your favor, tactics that make you a harder target, someone who's prepared rather than passive, because that's what they're counting on. Your passivity, your assumption that they'll do the right thing, your unwillingness to engage with the tedious details of contracts and documentation. Every advantage they have depends on you not paying attention, not pushing back, not being ready for the fight that might come. Let me give you 3 pillars of defense that actually work. Pillar 1. Knowledge is armor. The first and most important transformation in your approach has to be accepting that the contract is not just paperwork to be signed and forgotten. I know reading a 50-page insurance policy sounds about as appealing as doing your taxes while getting dental work, but this is literally the document that will determine whether you're protected or abandoned when something goes wrong. You need to read it, not just skim it. Get a highlighter and mark every single exclusion, every limitation, every clause that limits coverage. Pay special attention to any language that contradicts what you were told by the agent or what you saw in the marketing materials. If there are terms you don't understand, don't guess. Look them up, or better yet, call the company and get clarification in writing. Email them your questions so there's a record. Ask specifically about scenarios you're worried about. If my house floods because of heavy rain, am I covered? What about if a pipe bursts? What if there's a hurricane? Get specific answers in writing that you can reference later if they try to deny a claim. This is tedious work, absolutely. But it's also armor. Knowledge of what your policy actually says, rather than what you hoped it said, changes the entire dynamic when you need to file a claim. Before you even buy insurance, treat it like the major financial decision it is. Research the company's claim denial rates. Look up complaints with state insurance regulators. Read reviews from actual policyholders, not just the glossy testimonials on the company website. Some insurers are notoriously difficult to deal with. Others, while still profit-driven, have better track records of actually paying claims. Your choice of company matters, and it shouldn't be based solely on who has the cheapest premium or the funniest commercials. You're entering into a relationship where you'll be completely vulnerable if disaster strikes. Choose the entity on the other side of that relationship carefully. Pillar 2. Documentation is your weapon. Documentation needs to become a habit before anything goes wrong. If you have homeowners insurance, take photos and video of your property regularly. Document the condition of everything valuable. Keep receipts, appraisals, serial numbers. If you have health insurance, keep copies of every medical record, every test result, every prescription. When something happens, the burden of proof will be on you to demonstrate what was damaged or what treatment you received. The insurance company will not give you the benefit of the doubt. They'll question everything, and if you can't prove it, they'll use that against you. But beyond just documenting your property and health, you also need to document every interaction with the insurance company. Every phone call should be followed up with an email summarizing what was discussed and agreed to. Just to confirm our conversation today, you said that wind damage would be covered even if accompanied by rain. Make them respond in writing. Create a paper trail that can't be disputed later. When you file a claim, keep copies of everything you submit. Track every communication, every request they make, every deadline. This level of documentation feels paranoid until the moment you need it, and then it becomes the difference between getting paid and getting denied. Pillar 3. Active resistance, not passive acceptance. When that denial does come, and statistically it probably will at some point, your first instinct might be to accept it, to assume they must be right, to feel defeated by their authority and expertise. Resist that instinct completely. The first denial is often just a negotiating position, a test to see if you'll fight back. Many people don't, and the insurance company saves money without any real effort. But if you push back, if you file a formal appeal, if you cite specific contract language that supports your claim, suddenly you're a different kind of problem for them. You're someone who might cost them more in time and legal fees than just paying your claim would cost. Sometimes that's enough to change the outcome. And if the internal appeals process doesn't work, don't assume you're out of options. Depending on your state, there may be insurance commissioners who handle complaints, or regulatory agencies that can pressure companies. There are also attorneys who specialize in insurance bad faith cases and work on contingency, meaning they only get paid if you win. The point is that acceptance should never be your first response to denial. Make them work for it. Make it expensive and difficult for them to refuse you. That's the only language they really understand. Beyond just fighting better within the existing system, consider whether you need to be in this system at all, at least not to the extent you currently are. Insurance cooperatives and mutuals operate differently than shareholder-driven corporations. They're owned by policyholders, which changes the incentive structure fundamentally. Meanwhile, building your own emergency fund, essentially self-insuring for smaller risks, reduces your dependence on companies that profit from denying you. Obviously, not everyone can afford to self-insure against major catastrophes, but for smaller risks like minor car damage or household repairs, having a robust emergency fund means you're not at the mercy of a claims adjuster every time something breaks. It's a mindset shift from outsourcing your financial security to building your own resilience, and that shift reduces the power these companies have over your life. The overarching principle here is that they're counting on your passivity, your trust, your assumption that the system will work as advertised. Every defensive strategy I've outlined requires you to reject that passivity and engage actively with a system designed to discourage exactly that kind of engagement. It's work, it's frustrating, but it's also the only way to avoid being just another statistic in their quarterly earnings report, another denied claim that improved their loss ratio, another person who paid in for years and got nothing when they needed it. Don't give them the satisfaction of being an easy mark. Make them earn every dollar they try to keep from you. And know going in that you're dealing with an adversary, not a partner, no matter what their advertising says. Comment below if you're ready to take a different approach to insurance. Just right, not a victim anymore. If you made it all the way to this point, I'm genuinely grateful you stuck with me through this journey, because this isn't easy stuff to sit with. Understanding that systems we've been taught to trust are actually designed to exploit us requires a real shift in perspective, and that takes intellectual courage. The fact that you're here means you're willing to question the official narratives, to look behind the curtain at how money and power actually operate in the world. That's exactly the kind of mindset this channel exists to support. This is what we do here. We examine the architecture of systems that present themselves as serving the public good, while actually serving concentrated wealth and power. Every video is about pulling back another layer, revealing another mechanism, connecting another dot between what we're told and what's actually happening. If that resonates with you, if you want to keep seeing these patterns, subscribe. Your subscription isn't just a number to me. It's a signal that this work matters, and it ensures you don't miss what comes next in this ongoing exploration. Drop a comment letting me know you made it to the end. Just write something like, "I'm awake to this now," or whatever feels right to you. I read every comment, and honestly, that's where some of the best conversations happen. It's where this becomes more than just me talking at you and starts being an actual community of people thinking critically about these issues together. And hit that like button. It seems small, but it genuinely helps more people searching for answers about how the financial system really works find their way here. There's a video right next to this one that takes what we've covered today even further. We're going to look at another piece of this puzzle, another place where the promise of protection gets weaponized into a tool for extraction. Click on it and keep this momentum going. Because once you start seeing these patterns, you can't unsee them. And understanding how the game is played is the first step toward not getting played. I'll see you there.